If the dollar catches a bid, in the last 18 months, we've seen this correlation. Dollar up correlates with yields up, right? And this is Bitcoin in orange. I've got a moving average to smooth it out and demonstrate. And then on the green, I've got the long bond treasury future, the 30-year ultra on the CME. And I've flipped um, the right side y-axis. It's price of the long bond or future, but I inverted it so directionally up on green means yields up, right? Or price lower is the same thing equivalently. So what we've seen as the U.S. fiscal situation has continued to deteriorate, especially in the last year of the Biden presidency, but this has so far continued. When you see dollar up, what you're usually getting with that is rates up, right? And there's a lot of forces playing into that. Interest rate differentials on currencies, right? Higher interest rates on the dollar relative to all competing offerings means dollar up, but it also, higher interest rates means dollar up, correct. But it also means the debt gets harder and harder to service, right? And so the US government is going to borrow what it has to borrow. Its liabilities are already locked in. It just means there's going to have to be more interest payments. And when you're in a state where you're at 120, 130% debt to GDP, all interest payments are essentially inflationary, right? That emission is just you're creating more currency units. You're funding new treasury debt. You're paying off the old bonds by rolling over your maturing debt and then borrowing more. Higher interest rates just increase this the money in the system, the debt in the system as well. But that monetary creation is just flowing into asset prices. And where you really see this pick up, it's in the equities, right? Dollar up, rates up, equities up. But at the most pressing, at the tip of the spear, in my opinion, on this and what's still perceived as a risk asset in markets on this trend, dollar up, rates up, Bitcoin up. And you see this in the correlations, right? So higher dollar, higher interest rates, higher Bitcoin, rinse, repeat. That's what we've seen in this Bitcoin bull market. And it's because, if you think about it, Bitcoin with the 21 million supply hard cap as a money, as a scarce good, when that debt creation comes into the system, it flows into, think about everything else having a pipe, right? So you've got the housing stock. Well, you see housing prices increase. You see an equity increase. You see the Mag 7 increase. And those pipes are all pretty big pipes. There's a lot of liquidity there. And then the pipe is also, it's not a fixed pipe. Those can grow and contract with, say, broker-dealer support and liquidity. Bitcoin itself, the only variable that can change. The pipe is at 21 million. The halving cycle is actually shrinking the flow of emission of Bitcoin, every 4 years. We just had a halving cycle in April. So the pipe gets tighter, and Bitcoin as a finite thing is, what would I say? Like you're just flowing new liquidity or money creation through that pipe. What has to expand? Well, the most pressure of any asset to take that is Bitcoin price, right? So that's my opinion of what we're seeing. And if you look at the Bitcoin chart, I don't think I posted it, did I? No.
We're back above
You see
100K.
this,
Yep.
you're back above 100K.